So I see Zoth maybe in the top three financial players in the world. We were one of the top protocol dApps on Parachain.
RWAs, or real world assets tokenized on chain, are projected to be a 4 to 10 trillion dollar market. The achievement of this market can be accelerated if DeFi native utilities or ecosystem is built on these RWA tokens or assets. Today's guest, Pritam Dutta, co-founder of Zoth.io, has been attempting that, and they're already finding fast product market fit. Sri Misra, your host for Alpha Unhashed. Welcome on board, Pritam, to Alpha Unhashed.
Hello, hi Shri.
Hi.
Glad to be speaking with you.
Pritam, what is a RWA restaking layer?
So Shri, RWAs or real world asset tokenization has been around for what 5 years since I have been in crypto. They have never really spoken up, never really picked up in terms of scale, in terms of size, vis-a-vis other protocols like DeFi. Primarily because the whole RWA permission structure goes against the very tenets of crypto, which is permissionless, DeFi native, multiple DeFi utility. Even now, for example, people are talking about tokenizing bonds, treasuries, but it's still permissioned, still has much lower share of DeFi. While at the same time, stable coins, which has been one of the most promising and most successful, I would say, products in the crypto space. Now I think the combined stable coin issuance is larger than Visa and MasterCard combined in just last few years. So at Zoth, we are creating a decentralized infrastructure where RWAs could be put as a collateral and a stable token can be minted called ZUSD. What it allows is capital efficiency. For example, somebody holding a highly liquid real world asset like US Treasury bills, money market fund can put it as a collateral, get their yield, which is generally 4 to 5%, and mint ZUSD, which is a fully DeFi native permissionless token on top. It allows them multiple capital efficiency, and at that same time multiple DeFi use cases, which is generally not available for any RWA assets like DeFi lending, borrowing, staking, and multiple payments and remittance use cases. So in a way, we are allowing the entire 2 trillion fixed income liquid RWA assets to come on chain in a DeFi native way and creating an ecosystem for their usage and use cases. Every large institution, every large financial institutions is interested in RWA and stable coins. At Zoth, we are building this decentralized infrastructure which allows every institutions, every individual to mint a stable token. And the profits are not just kept by one entity. Profits are shared to ensure that there is a more community ownership of it, making it a truly decentralized network for RWAs.
Okay, that's interesting. Let's dig into that deeper. I mean, RWA restaking. What is RWA staking in the first place? Is there any such thing?
uh, there it started since last year where a couple of protocols like Ondo, MakerDAO have come up with RW staking, where tokens backed by liquid RW instruments could be put as a collateral, and loans could be taken on that.
It's very interesting how staking, which essentially came about in proof of stake networks for securing the network, essentially for validators to stake their native tokens and then secure the network. Now then it went on, the use case came about for liquid staking platforms, the likes of Lido, and then ultimately an on top layer of utilization on top of that. And that's the whole sort of, what shall I say? That's the whole magic of DeFi, wherein LRT the tokens came about, where liquid staking tokens could be used further to on restaking platforms. Now, from what I hear you say, RWA tokens essentially, which could be anything from financial assets to real assets, and I mean Ondo is obviously one of the leading players. So let's say Ondo and Maker as well. So let's say Ondo has got certain RWAs where the underlying asset is, let's say, TradFi financial assets. Okay, so let's say TradFi assets have been tokenized on chain, and those RWA tokens you mentioned, some of these platforms have come about where they allowed staking essentially for users to earn a certain yield on top of that. Was there any underlying, was there any utility of the staking, or it was purely just to secure liquidity on the platforms, or what was it?
It's primarily it has started with securing liquidity, securing loans, but I think the use cases are growing in this space. Getting used for multiple payments, remittances, etc.
Okay, and so, and where you've have you guys come up with the whole liquid or RWA restaking as a concept, or has it been there also with any of the protocols?
So it has been, it's only kind of started about a year and a half ago. It's quite new actually. So the idea is simple that look, the entire crypto digital assets market is 3.5 billion, which is less than the market cap of Nvidia. Now, restaking on top of digital assets primarily allow you, multiple use cases around lending, borrowing, etc. on top of it. In traditional finance, uh, lending, borrowing, collateralization is a uh, very big concept. And just one large hedge fund based out of New York does possibly more volumes than many large players in the DeFi market. So what we are saying that look, the TradFi opportunity is much bigger. If I can bring, especially to start with in phase one, liquid real world products, especially financial assets which are highly liquid in nature, are globally rated and have huge secondary market, bring them on chain through a simple process and create a DeFi native utility on top where they can be lent, borrowed, custodied, can be swapped across permissionlessly like any other digital assets. You basically open a Pandora's box of getting large amount of TradFi liquidity in crypto and then ultimately increasing the size of the whole on-chain ecosystem from current 3.5 billion trillion to possibly 10 or 20 trillion, because the TradFi ecosystem is sizably bigger and it provides an opportunity for it to be integrated easily in the crypto space.
Right. No, absolutely. I think there's no question about RWA coming on chain, and tokenization obviously playing a hugely important role there. So RWA is as a concept. I mean, obviously been around. It's very clear, and sort of there'll be multiple sorts of underlying assets from TradFi finance, sort of from financial assets to real estate to even things like cellared wines to portfolio of arts. Everything could get on chain and is already happening as far as RWs are concerned. Now, the DeFi native application is when what I hear you say is that we're not just bring it on chain, but where that RWA token now represents those underlying assets, but you create further utility on top of that by allowing that to be staked. And I guess you're probably using the word RWA restaking in a more looser sense, but I guess what you mean is staking it itself, right? Hmm.
Taking, yeah, so see, it's a simple process. So phase one of RWA revolution, well, see, RWA as a sector has been around for quite some time. is, you buy a house, you tokenize it, you buy a bond, you tokenize it. What you are doing is you are basically bringing some of the TradFi elements to it. You create an SPV, you tokenize it, you sell shares. But there is a misconception that just breaking a large fraction to smaller pieces increases liquidity. It doesn't, because why would I want to buy, say, a small fraction of a real estate asset if there is no further utility on top of it? Means there is no more alpha. Means $50 asset of an apartment doesn't really excite a typical crypto trader, or buying like a treasury bill doesn't really excite a crypto native degen. So what at Zoth, we felt that, look, that this whole process of bringing assets on chain in the current way is broken, and it needs to be rethoughted. Because you and the way we are approaching it, look, we look at what are the core crypto tenants. It is DeFi native, composability, permissionless. How could you build a layer on top of real world assets where you could basically create a RWA backed or a digital token representation of the underlying RWA asset, which is fully DeFi native, there is, and fully permissionless, and without coming with the, I would say, traditional infrastructure structures that an RWA, a typical RWA player brings, and making it easy for users to get access to it. So at Zoth, that's what we are doing. We are making it much simpler, DeFi native, and bringing, as of now, highly liquid financial assets on chain, where they can be put as a collateral, and ZUSD can be minted, and we have built multiple use cases on top of it,
Right.
creating an ecosystem on top of RWA, which, to be honest, is not that big as of now, and we see this will be the biggest opportunity in coming months and years.
Okay. Okay. We'll get to the sort of minting of a stable coin backed by the RWA token. So we'll get to that in a while, and it's very fascinating to understand this. Like I was sharing on with one of the last founders I was talking with last time around. Doing unnashed is just such a fantastic learning experience for me talking to you guys, and there are so many new things, fascinating things that are happening in crypto and DeFi. So I'm kind of really sort of trying to understand the multiple dimensions of the whole DeFi native utility that can be the ecosystem that can be built on RWAs, as you're kind of sort of aiming to do. Now, one of them is about the issuance of a stable coin backed by underlying assets. But before we get to that, let's try to understand at a more granular level, what are the RW tokens that you guys are accepting as underlying assets currently? Is it only Zoth are assets which are tokenized on Zoth already, or any other like an Ondo RW token, or anything of that sort?
Yeah, so Zoth team actually comes from a combination of DeFi native and traditional background. We have ex president of HSBC, as well as ex Circle have product, as well as Coinbase product, and part of the team. So we follow a deep compliance, risk management, and volatility assessment process. As part of that process, not only the Zoth issued assets, which are primarily our we have our own product, which is backed by BlackRock iShares, but also products issued by Hashnote, one of our key partners, Ondo, Open Eden, Usual Money, and couple of other players, which assets we accept as a collateral.
Mm-hmm.
So, two ways: if somebody has access to stables, they go to Zoth platform, they can buy these assets, get the underlying yield, and on top get basically can mint USD, which has multiple use cases. At the same time, if somebody has access to, say, a hash note, which is a 1.5 billion AUM product, or OpenEden, or now Fasanara's Capital Fast, you put that as a collateral, mints USD on top, and you get access to that. So it works in a way where Zoth acts as a platform which allows to create CDP position, which is a collateralized debt position, where your tokens, which are issued by our verified partners and whom Zoth has verified, can put that as a collateral and mints USD on top.
Okay. So, when a user who holds any of these, any of the RWA tokens that you guys accept on the Zoth contract, and so they deposit them, and they get X percentage of ZUSDs in return, right? Which they mint
Yes,
as
yeah,
stable, and ZUSD is supposed to be a stable backed by these RWs, right?
this asset.
So just to
Yeah.
understand, suppose I came and sort of deposited $100 worth of an asset, an RWA token that you accept. How many ZUSDs will I get?
Yeah, so it depends from asset to asset.
Okay.
If it's, for example, USYC, which is considered cash and cash equivalent, you get almost 99% LTV or loan to value. If it is something like USD or plus plus, which is a staked asset on top of USYC, you get 85% loan to value. And yeah, means as of now, we are only accepting highly liquid assets like these.
Mm-hmm.
As we kind of get into other asset classes, which we will do in future, the loan to value will basically change based on the underlying quality of the assessment, the liquidation ratio, volatility, etc. For example, say, in I'm just saying, say in future, if we are taking say a private credit product, then obviously the loan to value ratio would be quite low because the liquidity is low, and at the same time the possible ability to liquidate it in case of a black swan event is low. So we take those calls. As of now, we want to restrict to the highly liquid fixed income market, primarily because that market itself is a $2 trillion market. So, first let me win this battle, and then I will got into other asset class.
Okay, very interesting, and we're going to dive into that deeper. But before that, Pritam, how did you land up with Zoth? And maybe before that, what is the meaning of Zoth, or what is the inspiration behind this name?
So, so Zoth actually started from was pretty much like a light bulb moment for us. So me and Kaushik, who is my co-founder, we were working together in Anheuser Busch, primarily building financial services across emerging markets like Latin America, Nigeria, and we traveled extensively across these markets. One of the things which struck us is that everybody had most of the target group, which is primarily middle to lower middle class customers, primarily buying our products from these markets, where if even if they don't have access to bank accounts, they have access to digital wallets. And most of these countries, there is a significant impact of I would say currency deflation, and that also created an I would say a strong interest in products like stable coins, which are seen as a stable store of value because the local currencies there were going down. So that kind of gave us an quite interesting insight into why we believe that stablecoin would be the big opportunity. Stablecoin market as of today is monopolistic. It is controlled by two large players, and pretty much everything around distribution and circulation is owned by them. But what we believe is that this is going to be one of the biggest inventions in this space, and this will completely accelerate how money moves in future. And for that, we believe that not everybody would have the power. Means anybody can issue a stable coin, but to distribute it, to get it to the people, to get it to masses, to create utility is a very difficult job and takes years and years of it. So that's when we came up with the idea that what if we create this infrastructure where pretty much anybody can issue a stable coin and leverage the network that Zoth has built, and we collectively become one of the largest network or protocols in this space, uh, driving the on-chain economy forward.
Right. Okay. And so you mentioned an user Bush and looking at financial products. So what sort of financial products were these? I mean, stuff like for channel partners, bill discounting, and stuff like that, or going beyond.
Yeah, me and my co-founder were both part of the ventures and innovation team. We had basically incubated a new business
Mm-hmm.
around short-term lending, credit, and products for small and medium businesses. So typically, Anheuser Busch has over 10 million plus small and medium businesses whom they serve. Obviously, beer is one key product which has very high gross margin, but at the same time, many of them do not have access to good working capital because many of them are not necessarily have the right banking support available. So most of the capital this partner used to get was from money lenders who used to charge them significantly high rates. And plus there was complete lack of access of modern technology in terms of payments, like etc. So we saw the opportunity to build the whole stack around the small and medium businesses, provide creating a business of areas like providing credit, providing financial product like loans, short-term loans, and other products, which basically allow them to grow their business and kind of scale from there.
Yeah. So that's sort of a ground level understanding of how stablecoins would find wide adoption going ahead, and why the issuance and availability and adoption of the different kinds of stablecoins would be important. So now that's an interesting insight. Now tell me a little bit more. What happened after that? So um, I believe you went on to found another a startup in the consumer space, in the food tech space. So just would love to hear what's been your journey before arriving at Zoth.
Yeah, so I kind of had I have multiple hats. I started my career with in India and worked across companies like Mahindra in the tech and space. From there, moved to Unilever, working across tech, e-commerce. Moved to London, played a role in some of the largest acquisitions that Unilever did. Then moved into product, e-commerce, data. While doing that, I moved back to India around 2018. Worked closely to build a consumer startup in the food tech space, primarily like delivering home cooked food across Bangalore, especially to the I would say bachelor crowd that used to exist. So created an I would say platform for that.
Hmm.
Post that, also had the opportunity to work with and build a network called Eagle 10. We Because I spent a lot of time, especially outside India in Valley, London, and saw the lack of, I would say, capital which is available to founders at say pre-seed seed stage. A lot of my personal experience is that lot of investors are available when you have basically scaling, but at that initial stage where say Valley has a very strong ecosystem, you have very limited support here, especially I'm talking about like 5 6 years ago. Things have improved now. Was not available in India. We built Eagleton Ventures, which went into back companies like Licious and couple of other players like Pybeam in the electric mobility space, Owine, which also got recent exits. So the idea was to kind of help entrepreneurs in this space. Around Opposed that around 2019, I decided to join Anheuser Busch. They were setting up a I would say digital transformation arm. As a company, it was very profitable. Obviously, alcohol and beer is very high margin business.
And where was this, in India?
It was in India, but the opportunity to kind of really scale it up. Um, like there could be multiple other businesses that could be scaled up. So we started at looking at opportunities, and the fintech business came up. My role was to kind of really scale it up from ground zero, take to a certain level, and while building that, had a very good experience with um, Web3, and especially stablecoin space. Um, got fair bit of understanding, and yeah, means around 2023 is when we started Zoth, and yeah, never looked back post that.
Hmm. Okay. And so 2023 is when, just around 2 years back, is when you started Zoth. So how did that come about, and what are some of the key metrics for Zoth today? How large is your team? How are you structured? I understand you're based in Dubai. Was that where you started Zoth, or you moved out of India? Share with us some of that.
Yeah, so we started Zoth actually at a very interesting time. Around a few months ago, FTX had crashed. So I was actually thinking, whether we made the right decision to start a crypto company at that point. There was nothing available. Forget investors or market. Everybody was very scared. But we had a very strong conviction in terms of the whole RWA narrative, the stablecoin space, and how it will grow in future. So first I left my job. Then Kaushik was my co-founder. He joined, and we started with two of us and two interns. I had a previous experience, obviously, in my angel syndicate venture fund of raising capital. So raised an initial family and friends, and an institutional investor coming on board uh, with an initial capital just to get started, work on the idea, build a good structure and all of that. So we spent pretty much 2023 first 2 3 quarters just trying to kind of refine the thesis, refine the idea, identify the gaps, identify the challenges. And it's actually end of 2023 onwards we zeroed in on the product that we would start with, which was primarily, first we started with bringing permissioned products which are highly liquid in nature on chain. Then in 2024 we started getting good traction. Chains started kind of seeing this is a good addition to the treasury pool. We worked with some of the key players like Cello, XDC, etc. in this space. And that gave us some validation that okay, there is something in this space which we could bring. And we raised a round post in 2024. We raised around close to 4.5 million. And the idea was to kind of from some of the top investors in this space is to really scale it up, because we felt that this is something which we could take forward. As we started scaling it, we realized that just building permissioned RWA products, bringing them on chain, it's a long shot. But okay, how can we really scale it? How can Zoth have, say, $10 billion in TVL? How can it really kind of revolutionize how RWs are bringing on chain? Quarter two onwards, we started working on the restaking layer.
Hmm.
We actually met more than 1,000 plus partners. And at the same time, one thing we clearly believed is building a retail distribution in crypto is very important. Especially every crypto company is a consumer company. So we focused on building a very strong retail community of over 2 million wallets, and close to a million plus community across social media. And that helped us primarily refine the idea and build it. And around since November, we have been testing our restaking layer for quite some time, and since December we launched it. And last week we were recognized as the top 10 fastest growing protocols in the crypto space. And I think yeah, there is a strong PMF we have reached, and it's now a question of building on it and scaling it fast.
That's fantastic. I mean, would love to sort of hear more. How did you go about when you said 2 million wallets? So these are wallets which were connected, which are connected to the Zoth protocol. Any EVM wallet, or how does it work?
Yeah, means it's pretty much a individual wallet. So see, the idea was that, like, if you build any asset class in crypto, you need to build a strong distribution channel. You know, a lot of founding teams focus on building the product, but maybe sometimes forget distribution.
Absolutely, yeah.
Our idea was that, look, product is absolute important. You go, if you have a bad product, no distribution can help, but a bad product will suffer if there is no distribution. And how do you build distribution, especially in a area like crypto, which basically has, so many challenges in terms of how you can advertise, etc. So we took a clear strategy that, we came up with a testnet. We partnered with some of the top chains, which were also in testnet at that point, like Movement Labs, Bera Chain, and we became one of the early players. We took early bets on these chains, Plume, for example, which launched last week, and we took some early bets on that. We started building with their teams. We created lot of gamified experiences where users could come, just play around, like, say, a game of minting ZUSD using their test tokens, swap, etc. And for them, they were rewarded. And we basically linked it with chain rewards, so the users get incentivized not just by us but our partner chains. That became quite viral. Is in fact, we were one of the top protocol dApps on Parachain, and lot of Parachain. In fact, we while we were doing this, I used to get like 10, 15 requests every day from Parachain community asking to invest in Zoth, because they were just so excited, kind of playing around with what we had built. And that helped us create a community, create a name or a brand for Zoth, because our idea is that, look, products would keep changing. Even, what Apple built 10 years ago is different from what it is today. But establishing a brand is very, very important. And underlying products will keep changing, because as market evolves, as the need evolves, you will have to tune to that. And we focused on 2024 first half on building that community, and second half we basically refined the product and launched, and that also helped because we already had a brand. So the uptick was quite fast. And had we not worked on building the brand, the uptick would have been like, for a new player to come and launch something, it would have taken them a long time to even get any tvl, any interest from lps, any interest from users.
Right. Okay. So that's very sort of very deeply thought go-to-market approach, which is something multiple good projects, solid projects also struggle with at various stages of their evolution. So and you built it by taking a slightly a challenger route of sorts, partnering the likes of newer infrastructure plays that were coming up. So you would have a community which is split across multiple chains, and now you've the current product is on Ethereum.
So there is no community split on multiple chain, and that's the beauty. See, the thing is, what Zoth, as a company, we have been very clear from day one. We are a multi-chain company. We believe that, the liquidity will be concentrated across few chains. Obviously, Ethereum, Solana are the big players, but there will be more and more chains coming in, and, to align yourself to one or two chains, unless it's a major strategic thing, it doesn't make sense. And as a product which you are building, which is RWA restaking, I need to be in as many chains as possible. I need to be where my customer is.
Hmm.
The customer won't come to me, I will go to my customer. So if that's the thesis, you do not build a community for the chain. Yes, we partnered with the chains, but they are now Zoth community members. Okay, they might be a Barachin member also, they might be a movement members, but they are Zoth community members. Now that helped us build a chain neutral community, our own community, which we can talk about, which we connect. We, for example, we recently did a founder AMA with my community. There were close to around 8,000 users who attended.
Hmm.
So
Awesome.
it's, and we are not even a chain. We are not, and Zoth, our core values have been that, see, the whole team and the idea has been that we believe on, like, basically trying it out. our my philosophy is that, you try things out rather than making strategy, rather than making doing things. Let's try it out. If it doesn't work, it's a sunk cost, we'll move on. And we also took the same approach with building a community. We tried it out. Our initial target was that let's just get 100,000 wallets, that will be good enough. We had an internal call, and there was a big fight in the team why we are getting an arbitrary target. And then, before we could realize, suddenly from retail there were like 2 million users and wallets coming, interacting, doing things on our platform. So I believe that, yeah, means we just tried. We had a clear strategy that distribution is important. We build distribution first, then introduce product, and I think that has worked for us till now.
Okay, fantastic. And what are some of the current metrics? I think just before the chat today, I was just looking up some of the stuff I saw somewhere. I think on your Twitter, Zoth's Twitter, that there are the current TVL on Zoth is around 135 million. Those are sort of is that correct? That's a fantastic milestone to reach.
Yeah, so current on-chain TVL on Zoth is 32 million. We ran a pre-deposit campaign with our community,
Okay.
which actually got a 135 million in commitments for the pre-deposit, and it's growing. Like as of today, it has kind of crossed 158, and which will translate into more on-chain TVL on the platform. But the idea was to showcase that, how a DApp could also put liquidity on its own, rather than depending on, say, treasuries or chains to
Shades.
do that.
Okay, all right. That's pretty amazing, actually. Those numbers and these pre-deposits are of what the same tokens that you accept. So or
Yeah, pre-deposits are of stables and tokens that we accept.
okay, and currently these are all sort of fixed income backed RWAs or multiple other RWAs as well.
So these are only liquid fixed income RWAs,
Okay.
typically money market,
Hmm.
on-chain treasuries, and those products, which are basically, these are the underlying collateral. The retail user won't necessarily buy the collateral; they buy ZUSD, which is a collateral debt position on top of these assets.
Right. And the retail user buys ZUSD with what?
Can buy it with USDT, USDC, or any other stable token. We will be soon introducing pairs with, like with Bitcoin, Ethereum, Solana, and other top cryptocurrencies also.
All right. So and they essentially sort of and ZUSD is a yield bearing stable coin. So that's how they kind of a access a yield, and the yield is generated by ZUSD.
Yeah, it's a yield or reward generating stable token.
Mm-hmm.
I would say more like reward. The reward is generated in form of, primarily, more USD gets issued to them for the reward, and there are incentive programs that we run, which includes tokens from our partner chains, as well as other partners that we work with.
Okay, all right, fantastic. So one of the things I do on the Alpha Nash podcast is celebrate one of these moments in the founders um, evolution and milestones. So what should we be celebrating for you today, Pritam?
So we sold 25 million worth of USD in January,
Mm-hmm.
so that we can celebrate.
Okay, fantastic. Let's toast to that. So, and I have got a beer from your, but it's not from your erstwhile company. I was so it's an acai beer.
So
So, hmm.
my first angel round was done by pretty much all my friends from my erstwhile company. So I'm quite loyal to, even today. Means I've tried to reduce drinking, but whenever I do, I only drink Budweiser and associated
You're
brands.
right. All right. But unfortunately, I don't have a bird with me, but with an Asahi, I will say cheers to that 25 million sort of landmark. That's a fantastic milestone. And ZUSD has been around. What are you drinking, by the way?
I'm drinking tea. Yeah.
All right. So how come no beer today?
So 2025 resolution is to kind of cut down, being just trying to keep it as less as possible.
Okay. All right.
January has been pretty much like zero, so yeah, I want to continue that streak.
Correlation and causation are not the same, but I'm sure you'd like to believe that the beer out of the way, the alcohol out of the way, and the 25 million getting into the product is sort of gone hand in hand. So keep it that way. All right. All right.
Yeah, means it is not. You are right. It's just that I feel I have achieved a bit more better mental clarity
Mhm.
um, by reducing the intake. So yeah.
All right. Okay. Now, sort of going into ZUSD, and obviously, there's a lot of thinking coming around issuance of stable coins, and stable coins are one of the largest categories which clearly have found product market fit in DeFi, and there will be multiple types of stable coins. Ultimately, every stable coin has to become yield bearing, but how these stable coins are issued, what are the underlying assets that are backing the issuance of these stable coins? Are they, for example, uh, you know are they backed one is to one with, let's say, a native currency, a fiat currency, of course, or other assets or even algorithmic stable coins as well. So there are multiple options there. There are new plays like Athena, of course, who've come about as well. There is from whatever one sees right now, there is a stablecoin regulation in the US, which is coming up fast, and of course, that's pertaining to the US. But uh, this regulation is probably looking at the disallowance of stable coins, which are backed by self-issued assets. I sort of have a vague understanding, or kind of an idea of what's going on that front, but haven't been able to get deep into the weeds on that. Is there any understanding that you can share around stablecoin regulation? How that is shaping up, especially pertaining to stablecoins issued by issue with which are backed by self-issued assets, or other alternative assets, and how do you see that might impact your pathway, and how you thinking about all of this? I mean, a general open-ended sort of question for you to kind of explore how all this could pan out, and how you looking at handling that.
Yeah. So very good question. So I think even the US regulation that is coming up talks about RWA backed stable token to be the future, and with assets being custodied by third party players. And I believe that's the way it will kind of scale. At Zoth, we believe that this regulation is a big opportunity to basically get into a market like US, and it will also provide us very unique opportunity to get there. Overall, the whole stable token or RWA market is gonna grow big, but I think the biggest USP for anybody to win in this market is gonna be distribution, and then issuance. And that's also one of the reasons where we operate like a network. The issuance at Zoth is not just done by Zoth. Means anybody who has the right asset can issue it, and at the same time, the distribution also is built through a network of partners, and which we believe is a strong moat and a strong advantage against existing players, because it upends the existing business model and kind of distributes the profits and distribute a lot of issuance mechanism across a larger set of players who have vested interest in it. So I believe that it's good to have strong regulations in this space, and this will help all stablecoin issuers. We have seen cases, for example, Terra Luna in the past, where there has been major defects, etc., and all of that. So best, I would say, stablecoin models are the ones which are backed by RWAs, because you have an inherent asset stability. But yeah, I think this space is evolving. I compare the whole crypto stablecoin space as what used to happen during early e-commerce days. It's like the wild west. So people who come early, experiment, possibly would have a much higher headway over a lot of others who are still waiting on the fringes and trying to think what to do and what not to do.
Right. Okay. And um, how are you guys? How is Zoth as a platform licensed or regulated, or is it completely on DeFi architecture which doesn't need any licensing?
So we have a primary issuance through which our permission products are issued. It is through a Cayman regulated fund, which allows us to basically have KYC'd whitelisted in players on board. Our permissionless platform is primarily issued through our entity in Panama, and it's a fully DeFi native ecosystem. Like any other, like it's like buying USDC, USDT from exchanges, and it's fully DeFi native. There hasn't been any. So, from a issuance perspective, we leverage our Cayman fund structure, but distribution perspective, which means that who can buy, who cannot buy, it's primarily DeFi native, and anybody who is connected to DeFi exchanges or DEX can buy it, similar to any other stable token or any other digital assets operating in this space.
All right. Okay. And Preetham, what's your vision for Zoth? I know you sort of touched upon it now and then, but how do you see your next 5 year roadmap?
So I see Zoth maybe in the top three financial players in the world, because I believe that more and more finance as it is done today would move on chain, especially the business of moving money from one place to other, and Zoth would be one of the largest players in this place, not regionally but globally. And we believe as a team we have the right rigor to go there.
All right, that's a very ambitious vision, and very very inspiring as well. All the very best with this vision, and as Zoth, and this whole concept of an RWA staking restaking layer kind of takes traction and moves ahead. So fantastic talking with you, Preetham. Really enjoyed the conversation.
Thank you.